it's a huge win for the crypto industry. We're looking at huge interest in stablecoin adoption, especially from institutions buying in. USDC solved a problem that Tether had. What do you think it means for some of these other stablecoins?
Looking at the Circle IPO, I would say this was a very successful launch by IPO standards. Right now, trading at around $105. Circle originally exploded onto the scene earlier this week. Its debut was more than double its price of $31 on June 5th. So, I think this is a success. What do you think, Mike?
Yeah, there's a bunch of crazy things that happen here. But overall, massively successful, right? Like, we talked on this show about Circle's plans, I think in April to IPO, and then they had to pause that due to the whole just economic uncertainty. And now they expected to price their shares at $27 to $28 per share, wound up pricing it at $31 per share, and that was grossly undervalued, right? Because they opened at, funnily enough, $69 per share on the New York Stock Exchange, and then soared to, like you said, I think it was at 108 earlier today, but now it settles down into 105. So, massively successful for on all fronts. I think it's a huge win for the crypto industry. We're looking at just huge interest in stablecoin adoption, especially from institutions buying in. USDC solved a problem that Tether had, right? USDC was the fully regulated, very centralized, all these audits and all these reserves that kind of Tether played in this gray area. So what do you think it means for some of these other stable coins that are maybe more decentralized and maybe not so regulatory oriented?
I believe that it's going to open up the door for them, ironically, because they're going to have a lot of value propositions. And with anything, there's good, there's bad. We obviously learned a little bit about algorithmic stablecoins from last cycle, but we took a lot of learning lessons from that and applying that here. So I think decentralization doesn't necessarily mean that we're going backwards. I think there's a place for it, for sure.
In general, I love the stablecoin space. Obviously, now everyone loves the stablecoin space. But like, I used to work for an L1 called Meter that had a proof of work stablecoin. Okay, it was kind of like a meta stablecoin. It was not that stable at times, right? And so that was like fully decentralized proof of work. You had to have, similar to Bitcoin, you had to have that. So you've got that on like one end of the decentralization spectrum. Then you obviously have USDC on the other end of the decentralization spectrum, fully regulated. Essentially you've got a team that kind of controls the supply of USDC. And then you've got all these things in the middle that are different flavors, right? You've got the Athenas that is based on funding rates. You've got Maker or Sky, whatever it's called now, that just essentially using crypto as collateral, but even though USDC is a large chunk of their collateral, and everything in between. In general, just this overall interest in stablecoins is massive, and it's just gonna flow down into all the decentralized stablecoins. And I hope they do. I hope the decentralized stablecoins get more love in terms of market adoption, and don't get overshadowed by the more centralized stablecoins, because I think that's where that's what we're working towards. That's what we're those have true value, and also the yield bearing stablecoins are another place to watch, where which is kind of one of the things that the Genius Act was not supportive of, right? Is that is yield bearing stablecoin, because they still have to figure out whether that acts like a security. But I love all the stablecoins, and I hope the rising tide lifts all boats.
And
good. Yep.
Go ahead.
Yeah, so I wanted to kind of make some remarks on the kind of the larger tech IPO market and how this might impact things that might impact crypto. So if you look at this is a massively successful IPO. You've had the CoreWeave IPO in March, which is more in the AI and plays a little bit in the crypto space. Like they had a very big IPO. Um, Gemini, the Winklevi twins, right? They filed confidentially filed for an IPO. You've got other major tech companies coming up, maybe not so much crypto, but like coming up with like Chime is IPO, fintech Chime is IPOing this week. Databricks, Klarna, maybe Stripe later, who obviously Stripe bought Bridge for over $1 billion. So I think like even though there's a lot of economic uncertainty there, I think a lot of companies, a lot of investors are hoping to see that uncertainty wane and things become more certain. These companies are more likely to have successful IPOs, and kind of this whole liquidity crunch of tech companies staying private longer. A lot of the funds a lot of investments that were made in the ZERP era of 2020, all of that like liquidity has been locked up for a very long time. And some of these we need more liquidity in the market, and that can only help kind of risk on assets like crypto, and venture funds and all the whole uh, uh, venture ecosystem. All this liquidity coming to the market is an amazing thing, and hopefully all this comes to fruition.
Yeah, Circle is definitely the big news still this week. There's a trickle on effect into tech, into crypto that we're all excited about. We're also going to discuss Pump.fun. They're in the news today about their raise. And X teams up with Polymarket. Plus, Mike's going to share with us 3 projects that are currently cashing in some big checks. So let's get to it, Mike. Next, let's talk about Pump.fun. They're planning on a 1 billion token sale at 4 billion valuation. You've got people that respect the game and they understand the business model. And then there's people that are just shaking their heads like, please, no, not this again. I have my theories on why they're doing this, but I would love to hear your comments on this.
Okay, well, I want to hear yours too, but yeah. So, like you mentioned, they're looking to raise 1 billion at 4 billion FDV. This would make it one of the largest token sales in crypto history. This is like so polarizing, right? Like Pump.fun, like they made almost $700 million in revenue in just a few months with this meme coin craze, right? But the issue is that they that this meme coin craze is essentially kind of over, right? They back in January they were making a $7 million in revenue per day. Now it's about 200K in revenue per day, right? That's a ridiculous drop, right? So I think, and maybe this is what you're going to get to, like people are saying that, oh, the only way that Pump Fund is kind of get the spotlight back on them is to do this massive fundraise. And oh, why did they made all this revenue? Like, why do they need to launch a token now? Like, this is crypto. Like, I think they should have launched a token earlier, like when they had a lot more momentum. And because one of the things that they talked about is sharing the revenue with the token holders, right? So now we don't know if any of that 700 million in revenue is going to be shared with the token holders, but maybe they haven't clarified anything that there, but like maybe it's like the future revenue. But the big question is, where's that future revenue going to come from now that we've seen such a huge dip falling off the cliff, revenue going from 7 million per day to 200K per day, right? So, I think it seems like the way they're designing the token and, with revenue share is kind of what all communities kind of want, right? Like that's what they ask for a lot of times. But the big question is whether or not, what's going to come up next for them to be able to drive revenue, to maybe it's not 7 million bucks today. That's like a ridiculous amount. Is one of the fastest growing companies ever. But yeah, what's going to drive revenue in the future to have value for the pump token? What do you think?
I think the biggest reason why they're doing this now is to bring back meme coin mania. It's not here anymore, right?
That's
Stablecoins is
true.
all the news, Bitcoin is all the news. So they're trying to create another meme coin craze run. I'm thinking logically about this, as a business, if that's how you generate revenue, that's what you want. Sure, that's fine. That's how you do it. But they are the main reason why there are projected 4 million tokens by the end of the year, and most of them will fail. I actually talked to Sebastian from Aqua now about this data point, and they are a big reason why. And you can look at that as, oh my gosh, that's amazing. They have such a huge impact on the industry. Or you can look at it as, well, it's not really shining the best light on us. I respect the business mindset. You do you, because we all have a choice, to each their own.
Yeah. But that's the thing, right? I'm not in support of the giga launching of all these meme coins, and I don't know what the exactly numbers are, but it's out there about there's a tiny percentage of people who made money on these meme coins, like minuscule percent, right? All these rug pulls happening, with tokens launched for Pump.fun. But like, yeah, I don't know. I don't know what's their next step, right? Is this enough to bring back the meme coin meta? We've just seen, the proof is on chain of like how dead the meme coin meta is right now, and how no one wants to take part because so many people have been burned for so much money. And so I like what is going to drive the future value of the Pump.fun platform or the Pump token. uh, I don't know. I don't know. Is 4 billion the right valuation? Maybe it was a few months ago. Is it now? Really hard to say. So I think there's a lot of questions to be answered with this token sale, and where value is going to come from in the future.
Maybe the prediction market will be able to point us in the right direction, Mike. So check out this news. Musk's X joins forces with prediction platform Polymarket. These are two powerhouses coming together. So I guess Elon Musk, besides all the bickering and complaining that him and Trump are doing, there's some interesting things that are happening behind the scenes and their partnership with Polymarket. What can you tell us about what went down here?
Yeah, so Elon announced the partnership between, I will not call it X, Twitter and Polymarket. And I think this makes a lot of sense, right? Like Polymarket took over the 2024 election. Elon praised it, uh, being more accurate than just the typical polls that are used. It's way more real time. There's money on the line. So, and obviously Twitter kind of being the source of real time news a lot, not just in crypto Twitter, but just a lot of the economic news that's coming out there, tariff news that's coming out. A lot of the analysis is real time on Twitter. So I think this is such a natural partnership, and they said they're going to start by launching a product that combines Polymarket's prediction market probabilities with Twitter's like real time data and Grok's analytical capabilities. So that'll help users with kind of these live contextual insights to make more informed decisions. And what's interesting is like something that's maybe not talked about a lot, but like this could be huge for Polygon, the chain, because Polymarket is built on Polygon, and now you've got this hundreds of millions of users on Twitter that can potentially be onboarded to crypto as a whole, but Polygon specifically because of Polymarket being built on that L2. So yeah, I think this is a very natural partnership that just makes a lot of sense.
Next, Mike, let's talk about the three projects that you're bringing to our attention today. because they're securing some pretty massive checks. Let's start with Shards Protocol. What can you tell us about them?
Yeah, Shards Protocol is an on-chain reputation and rewards protocol. So they raised not huge, but like a $2 million round from Animoca Brands, Kyber Ventures, Yield Guild Games, and others. They're developing a product called Aura that is like a decentralized reputation layer that captures and analyzes users' on-chain activity, such as staking, trading, community participation, and generates visible, verifiable reputation scores and unlocks rewards. And I think this is one of the things that really is can be a kind of foundational layer. So I used to work for what was called the Trust Protocol, and this is kind of part of that vision. It was called Utu, like to have a decentralized trust protocol. And I think reputation. We've got a lot of data out there, right? Like we've got our Twitter data, our LinkedIn data, our trading data on chain, and all that kind of makes us us. And that can be used in really positive ways to apply for jobs or and just be able to kind of represent ourselves. And I think if on-chain reputation can be accurate and solved, it can unlock a lot of different um, different products and give us access to a lot of different products in terms of financial products and career products as well.
3Chain. They are a credit-based money market.
It's a credit-based money market, uncollateralized DeFi lending platform. They raised 5.2 million in the seed round led by Paradigm, with participation from Wintermute, Coinbase, and many others. And yeah, so they enable USDC credit lines for traders, yield farmers, businesses, AI agents, by underwriting against verifiable financial proofs. So is like DeFi assets, centralized exchange assets, bank assets, future cash flows, instead of requiring on-chain collateral for loans. And so this is actually a form of on-chain reputation, right? They are using on-chain data. They are using centralized exchange trading data, and other types of data to be able to provide loans and credit, without having collateral, right? So this all kind of flows in of one of those things that can be unlocked with on-chain reputation, is lending. And so this is exactly what we're talking about. Maybe 3Chain or Shard Protocol can partner up one day, but like, look, under collateralized loan, we've been talking about this for years. You talk about Aave and Maker, you got to do at least 150% collateral, and yeah, to be able to do that, I think opens up a lot, especially with like small businesses that don't necessarily have extensive credit histories. I think could be a huge unlock.
Last but not least, Hey Elsa.
Yeah, so we've been talking a lot about the intersection of crypto and AI, and how, and we obviously went through a lot of the hype with trading bots on Twitter and other social media. So there that had a huge run up, and then a big crash, but hey, and I think coming out of this is like real infrastructure being built in the intersection of crypto and AI. And Elsa seems to be in this bucket. They raised a 3 million round led by M31 Capital, with participation from the Base Ecosystem Fund, MH Ventures, and others. And they help you create an AI agent that lets you trade smarter, automate interactions, discover new investment opportunities. And what's cool is like you can kind of do this through autonomous agents or like natural language commands, whether that's through text and voice and other modes. So I think this space is only going to be continue to grow. AI agents being able to trade on our behalf. It's just a matter of like, okay, we got through the hype. Now let's build some real products, and then and actually have some useful agents out there working on our behalf.
Let's try this out. How
Oh, cool.
should I invest $100? Oh, it's not letting me. It's grayed out. Well,
Uh-oh.
there goes that. Or maybe you have to log in first before trying it out.
Huh.
Regardless, good stuff, Mike. Definitely a big week with Circle and their IPO hanging strong. Let's see if that can continue. And if you found this video helpful, please subscribe to the channel, like the video, give Mike a follow, and follow along on their newsletter. And we'll catch you guys in the next episode.